A retired American deposits his own money and weeks later gets hit with a $10,000 IRS penalty. No crime, no warning, just a letter. And the worst part? He did everything he thought was right. Picture this. It's a quiet afternoon. You walk out to your mailbox expecting the usual bills, ads, nothing urgent. But then you see it an official envelope, IRS. Your chest tightens. You open it slowly, telling yourself it's probably nothing serious. But then you read it penalty, $10,000. And suddenly, your mind starts racing. What did I do wrong? Now stay with me, because in the next few minutes, I'm going to show you the exact mistake that triggers this and how to avoid it completely. Welcome to Rule by Seniors. I'm Rasmus, and I break down the financial rules most people don't even realize are affecting them, especially in retirement. Because what's happening here isn't about illegal money. It's about patterns.
And in 2026, across the United States, those patterns are being analyzed faster and more aggressively than ever before. Banks don't see your story. They don't know you sold your truck last week. They don't know your daughter sent you money for medical bills. They don't know you've been saving cash at home for years. They just see numbers. And when those numbers move in certain ways, the system reacts. And this is where most people get caught off guard. There's a rule in the US that requires banks to report cash transactions over $10,000. If you deposit more than $10,000 in cash, your bank files a report. That's it. No penalty. No automatic investigation. Just routine reporting required by federal law. Millions of Americans trigger this every single year, and nothing happens. But here's what almost nobody tells you. Trying to avoid that report is what creates the real problem. Let's walk through a situation that happens all the time. You have $12,000 in cash, completely legal. Maybe you sold a car. Maybe it's savings. Maybe it's money from family. And you think, I'll just keep it under $10,000 to stay safe. So you deposit $8,000 today and $4,000 a few days later. Seems careful, responsible, even smart. But this is exactly where people get blindsided, because that pattern has a name: structuring. And structuring isn't about whether your money is legal. It's about how your transactions look. If it appears like you're intentionally staying under the reporting threshold, that's what gets noticed. Now, this doesn't mean every situation leads to penalties, but it's exactly the kind of pattern that can trigger deeper review. And this is where everything flips. Depositing $12,000 in one clean transaction? Normal. Splitting it into smaller deposits? Now it can look like you're trying to avoid the system, even if you're not. And here's where it gets even more serious. Modern systems don't just look at one transaction. They analyze behavior. They look at timing, patterns, repetition, activity over days, weeks, even months. They compare your activity to millions of others, and they're extremely good at spotting when something doesn't match. They don't hear your explanation. They don't understand your intentions. They only see the pattern. And when the pattern matches something suspicious, that's when problems can begin. There have been real situations where retirees split deposits thinking it was safer and ended up dealing with penalties or stressful investigations, even though the money was completely legal. And here's the part most people never think about. What happens after your account gets flagged? It doesn't mean you're guilty, but it can mean your activity gets reviewed more closely. Banks may file additional reports. Transactions may be examined more carefully, and in some cases, you might be asked to explain where the money came from. Now, many of these situations get resolved, but the process itself? Stressful, confusing, unexpected, especially for someone who believed they were doing the right thing. Now think about this for a second. For years, people believed staying under the radar was the safest move. Keep deposits small, avoid attention, but today, trying to stay under the radar is what puts you on the radar. That's the shift. And most people haven't realized it yet. Let me give you another example. Imagine you've been keeping cash at home for years, emergency savings. Completely normal. Now you decide to deposit it. You don't want any issues, so you start depositing small amounts over time. From your perspective, safe. But to the system, it can look like a pattern forming just under reporting limits. Or maybe you're helping family. Money moves in small amounts, different days. Completely normal life. But when those deposits start forming a pattern, that's when questions can start. Again, not about intent, about appearance. So what's the right way to handle this? It comes down to one simple idea. Clarity. If your money is legitimate, don't try to make it look smaller than it is. Deposit it properly. Let the bank file the report, because that report actually protects you. It creates a clear record, a clean financial trail, a story that makes sense. Now let's talk about how to protect yourself moving forward. Start with documentation. If you sell something, keep a simple record. If you receive money, have a basic explanation. If you move large amounts, keep proof. Nothing complicated, just enough to support your story. Next, consistency. Make sure your tax filings match what's happening in your accounts. When everything lines up, the system sees clarity, and clarity doesn't raise questions. And finally, mindset. Stop thinking in terms of hiding activity. That worked decades ago. It doesn't work anymore. Today, transparency is what protects you, because the system isn't looking for normal behavior. It's looking for patterns that don't add up. And when your financial story is clear, there's nothing to question. The truth is, most retirees will never face a situation like this. Millions of transactions happen every day across the United States. The vast majority are routine. The problems usually come from misunderstanding, not wrongdoing, people trying to do the right thing, based on outdated advice. So if you remember one thing from this video, make it this. Don't try to outsmart the system. Work with it. Deposit honestly. Keep simple records. Stay consistent. That alone removes most of the risk. And the next time you walk out to your mailbox and see a letter from the IRS, you won't feel that same panic, because you'll understand exactly what triggers those situations and how to avoid them completely. If you're retired or planning retirement in the United States, you need to understand this now. Subscribe to Rule by Seniors, because here we break down the rules that quietly affect your money before they turn into expensive mistakes. And in today's financial world, understanding the system isn't optional anymore. It's protection. And that's the difference between confusion and contour.